Hi, this is Chuck Oliver. Welcome to Taxes Saved Case of the Week. Super excited to talk to you about a client who actually saved just shy of $100,000 of income taxes and was able to Roth convert $300,000, right at about $300,000, a little bit north of that. And this will be looking at the short-term impact of what this did to save the amount of taxes. Davis, let's take them through.
Yeah, this is an exciting one, Dad. We'll get right into it. And so this is going to be a single filer. So go ahead and share my screen. All right. So a little bit more tax savings because of those single filer brackets, as those can imagine. But here we got some great IRMA planning, income-related Medicare adjustments, as well as Roth conversion planning for this client scenario. So we'll go ahead and walk people through it here. So share my screen and get this going. So here you'll see. Right. This client's really retired at this point, but they're really wanting to start taking some income off of their retirement accounts, and they don't really want to pay as much of the tax, right? So what do? Right. Here you can see the income breakdown for a 64-year-old out of the state of Texas, right? And they're going to have, a little bit of ordinary dividend, a little bit of taxable interest. But the big thing here is the $300,000 of Roth conversion on line 5B, right? And then they also have some Social Security benefits. And then they even have a capital gain here on line 70 of 60,000 to get the liquidity they got for this investment they made in a software strategy, right? So we'll get into the solution. So right now they were going to pay with all this income added up, $391,000 of income. With that comes a tax burden in the state of Texas of just federal tax, fortunately, of 102,000 and change, right? And so with that, they invested 61 grand in a software strategy that generated a 5 times deduction in the first year, with here being a $305,000 deduction you see here on line 8, right? And this dramatically helped their tax bill, but also helped their long-term benefits of IRMA care or IRMA surcharges. And so here you can see we went from a tax burden of 102,000, as you see on the tax return, as well as here on the screen, to 4,200 bucks, right? With a taxable income of 70 grand. Now, remember that 70 grand for those listening today, because that's very pertinent to the long-term planning that was done here in this strategy. And so here you can see, right, we have 160.6% return on tax savings year one. Remember, outlaid 61,000 to save almost $98,000 in first year tax savings with this strategy, right? So there they got their money back. Again, we're only talking return on tax here. No return on investment that this strategy also has as a business investment. So the long-term benefits here was the surcharges that they were going to face, right? If they weren't going to have, they're going to face about 3,500 to 5 grand 2 years from now, taken out of their Social Security, right, checks because of this jacked up income of 391,000. But because their income is now at $70,000, right, as you see here,
Yeah.
now they don't have to pay any Medicare Part B and D. So this one had some really great strategic planning. Not only did we save them $98,000 in taxes the first year, so was logging some nice predictable income in this strategy, but we also saved them from that, what we joke about, Irma, she's not so nice. And so this is a great one for, just the short-term impact of tax savings, but also some nice trickled in long-term tax savings with Irma.
Yeah, so for those that are interested to learn and you're serious about still saving taxes this year, go to taxessave.com. That's taxessave.com. We have an on-demand educational webinar where you can learn tax savings techniques right at your fingertips on demand. And then by reviewing that, and in fact, this time of the year, I would encourage you go to the site, scroll all the way down to the bottom, and request a saving tax optimization plan analysis. It's a complimentary review of kind of the tax risk road you're traveling. And then that way we can determine what would be the best strategies if it's a fit. And then is there the proper time? Because we're running out of time. The techniques are there, but the timing is making it difficult. So I would encourage those that are serious, go to taxesave.com, scroll all the way to the bottom, request a saving tax optimization plan analysis, like a lot of you have already done. We've had a number of people that have requested because they're still wanting to get tax savings done for 2025. And then scroll back up, and then you can opt in quickly and you can watch the on-demand educational webinar. We have two specific case studies that you can learn from, be it W-2 high wage earner to self-employed to retired to strategic Roth conversion, all the way across the board. And it's a very short to the point educational webinar of about 30 minutes, but it will really teach you what others have been able to do to accomplish removing unnecessary tax. taxessaved.com, taxessaved.com.